Welcome to Essentials Explained. My name is Luke, and today we'll be walking through an example case study for a financial services firm. This is a typical final round interview focused on a qualitative sales force optimization. There's less math in this problem, but focused very much on building a structured framework and executing it appropriately. Client is Banco. They are a major diversified financial services firm with 4 primary segments: checking accounts, saving accounts, loans, and mortgages. While the bank is currently profitable, the CEO wants to increase their market share while maintaining profitability. He wants to invest in additional sales resources with 3 primary options: branch managers, telemarketers, and mortgage agents. Key question being, how should Banco allocate investments between additional sales resources to increase market share while maintaining profitability? Before we dive into the framework, let's go over a few clarifying questions. How does Banco think about market share? Number of customers, revenue dollars. Our client thinks about market share on a per customer basis. Make sure you clarify what the definition of market share is from the client. This is super important, and honestly, for any case that has a market share question, make sure you understand what this definition is. It's very different if you're trying to solve for revenue dollars versus number of customers. So ask this question, clarify it, make sure you know, because I'd say the number one issue a lot of candidates run into is they don't clarify up front and they don't know what they're trying to solve for. This is something that's super important when it comes to the actual job of working on a consulting team, where if your supervisor asks you to do something, having alignment and making sure you're aligned between the two of you is really, really important and really helpful. So they're going to test this skill, and they're really going to emphasize that you have the skill of understanding what the question is and you have all the pieces you need to solve this problem effectively. Next, I would like to confirm my understanding of the business segments. My understanding is that the client has 4 segments: checking, which is personal checking accounts; savings, which is personal savings accounts; loans, which includes personal loans and lines of credit; and finally, mortgages, which are personal loans backed by real estate as collateral. And this bank only serves personal investors, not businesses. Yes, that is correct. Now that we have an understanding of the business, let's build a framework to how we would approach this problem. So our goal is to increase market share while maintaining profitability. So the 3 main buckets would be the company, the market, and finally the growth, or the sales force engine we want to use to grow market share. Banco has 4 main segments: checking, savings, loans, and mortgage. These can be grouped into 2 primary buckets: checkings and savings, which are based on the number of deposits to represent the number of customers, and then loans and mortgages, which is based on the number of loans that the company gives out. This isn't necessary, but this is kind of a nice to have, where if you can layer in additional context into your case interviews, it will show your interviewer that you actually understand the business instead of just reiterating the 4 business segments that they gave you. In this one, I could just say the 4 segments, but it shows that I actually understand the business if I can group them into checking and savings, where you receive customer deposits and then you retrade those or you invest those in higher return assets, which return some kind of spread on that investment. And then the other side, which is loans and mortgages, where you're actually loaning money out to customers and then make money off some interest payment on the loan. So being able to just bucket those 4 segments into 2 distinct groups will demonstrate to your interviewer that you understand this business and that you have an appropriate understanding of the business context instead of just reiterating the 4 business segments. The questions I would want to understand are, within the business units, what is the current mix of business? And while we understand Banco is profitable, how profitable are they? And does that profit vary by segment? To help us understand where we should invest and how much we should invest in our sales force. Finally, it would be helpful to understand customer retention, to understand whether or not it's worthwhile investing in retaining existing customers or going out and acquiring new customers. On the market perspective, it would be helpful to understand Banco's current market share and how this varies by segment. We would also want to understand Banco's main competitors, or if they have done anything recently to increase their own share, or any investments that have been successful or unsuccessful. And then finally, on our customers, we want to understand what their key purchasing criteria are, or any switching costs, to understand how we might acquire more customers, or if we're losing customers, why that might be the case. For our last bucket of growth, I want to segment it by the 3 sales force options: our branch managers, our telemarketers, and our mortgage agents, to understand what is the expected increase in market share based on each one of these investments, and does it vary by business segment? And then what investment is actually necessary to launch this sales force? And then what is the potential return on investment or impact to profits from each one of these growth options? options. In summation, I want to think about this problem as an optimization of 3 different options, where I can build a 2x2 of profitability and market share impact to understand which sales option I want to invest in. Where the lower left of our segment will be negative profitability investments with minimal market share impact, where we should not invest. Our top left and bottom right segments will be options to selectively evaluate for investment, as they could either be significant increases to profitability, but minimal market share impact, or a significant market share impact, but a decrease to profitability. And then finally, in our top right, we want to invest in the buckets that will have a significant impact on our market share and increase our overall profitability. At the end of our case, my goal will be to place these 3 options somewhere on this 2x2 to understand the appropriate allocation of investment between our 3 sales options. Does this approach make sense to you? Make sure you confirm the understanding of the framework. This is super helpful. If your interviewer says, that's awesome, you're doing great, you know you have a check and you know you can follow it, but they might give you some pointers and they might say, I think that's right, but maybe actually think about this. And that's just a great way of making sure you're heading on the right track and getting them to be engaged and making sure it's an interactive process and more of a conversation than a diatribe where you're spouting out all this information. So if we go back to our framework, let's start on the company perspective. What is the current mix of business by segment? We actually don't have an exact breakdown of mix by product. So then what about the profitability? What is the bank's current profitability? And how does profit vary by segment? Profitability is roughly 10% for the whole company. And profitability across services is generally equivalent, although loans and mortgages have historically generated higher profits than savings and checking. So helpful to understand, and that there isn't significant profit variation by segment. The profit of 10% implies that we have ample room to play with to increase market share. And then finally on retention, how has customer churn trended within Banco? Customer churn has been negligible during the last 10 years. So if we go back to our framework, we can plug in our answers and come up with the conclusion on the company perspective that it's worthwhile to evaluate all business units and focus only on new customers. As given retention has been minimal, focus on retaining existing customers will have a limited impact on market share. So let's move on to the market section. For our market share, what is Banco's current market share? And how does this vary by segment? Our client has an estimated 20% of market share and breakdowns in the following segment as follows. Checking 22%, savings 18%, loans 25%, mortgages 11%. The primary takeaway here is that mortgages are significantly below the other segments, which means there's likely room for growth within mortgages where the other segments may be more static. Banco's main competitors. Do we know of any investments to increase share by competition? Our client has 3 main competitors, all with roughly 20% share, and then a fragmented tail of local institutions. We don't have any market intelligence to suggest that our competition has made recent investments. What about our customers' key purchasing criteria? Are there any switching costs? Customers typically make purchasing decisions based on the quality of customer service and the offered rates of their products. There are minimal switching costs for checking and saving accounts, but loans incur a refinancing fee from the alternate institution. Our client's understanding is that all competitors have similar levels of service and offered rates, and no one is particularly differentiated when it comes to customer service. So if we take this information and plug it back into our framework, our main takeaway is that we should investigate the underperformance in mortgages. We know the competitive landscape is relatively concentrated and will be difficult to take share in other segments that are likely relatively mature. And on the customer perspective, there isn't significant differentiation that would allow us to outperform our competition. Finally, moving on to the growth perspective. What is the expected increase in market share, and how does this vary by segment for each one of our sales options? Our client has provided us with the following chart, which lays out the profitability impact of each one of our sales categories and the breakdown between impact on existing customers versus new customers. If we go through each one of these options, we can see that branch managers are low profitability and have a low impact to market share, as they mostly focus on existing customers. Our telemarketers are high profitability, but again, a low impact to market share as they focus on existing customers, while our mortgage agents have medium profitability, but a high impact to market share as they mostly reach out to new customers. Key tip here, make sure you are listening to the answers you receive and actually incorporating the information you get from your interviewer into your framework. If you see in this one, I asked the first question and I got answers to both my questions. So I'm not going to ask that second question. I'm just going to jump ahead and figure out what I need to do to solve this case. Sometimes candidates get caught up where they build this awesome framework and they have this great list of questions and they just run through them without actually thinking about, do I need to ask this next question? Do I already have the information I need to solve this question? So if we take these three segments, what we might want to understand are the specific responsibilities of each sales option. My understanding is that branch managers would serve existing customers in physical brick and mortar branches for all products. Our mortgage agents would sell mortgages to new customers, but my understanding of the telemarketer service is actually missing. And I would want to ask the interviewer, what exactly are the responsibilities of the telemarketers? They would fill us in and tell us that they call existing customers to renew services. This is something that maybe I should have done during the clarifying questions section. You can also do here, depends on your preference. It is helpful to know it up front, and honestly, in retrospect, it's probably more helpful to make sure you know what do branch managers do, what do telemarketers do, what do mortgage agents do, and what segments do they overlap with first, and then you can probe deeper on them later on in the case. Even if you think you know what branch managers do, make sure you confirm with your interviewer and say, my understanding of branch managers is they serve existing clients in the branches across all of our business segments. Is this correct? And they will either say, yes, that is correct, or they will say, no, they actually do this. So as a takeaway here, make sure you clarify things, even if you missed them in the beginning. So helpful to understand the responsibilities of each one of these options. And now we have enough information to work with our original framework. And we can place branch managers as low profitability and low market share and not invest in that option. We can place our telemarketers as high profitability, but relatively minimal impact on market share. So selectively invest if we want to increase profitability. And then finally, our mortgage agents as moderate profitability, but a significant impact to market share. So our takeaway is that we want to invest in mortgage agents as they will help us increase market share while maintaining profitability, solving the key question of the case. So the CEO of Banco walks into your team room and asks, what is your final recommendation? My answer would be, in conclusion, we recommend you should invest in mortgage agents for three main reasons. One, the bank is currently underpenetrated in mortgages. Two, mortgage agents focus on new customers as opposed to the two other options which focus on existing customers. And three, they have a slightly negative impact on profitability, but given the bank's current profit margin, we believe the bank will still be able to maintain profitability while increasing market share. If I had additional time, I would seek to understand the historical underperformance in the mortgage segment and try to quantify the appropriate allocation for mortgage agents to understand what would be the best option to optimize our market share while maintaining profitability. For these cases that are more interviewee-led, I would make sure you are always referring back to your framework and staying very, very structured so that you never get lost throughout the case. And that you always know what's the answer you're trying to solve, right? The answer I'm trying to solve is I want to build this 2x2, and I need the answers to put my little dot or circle or square on that chart so I know what to invest in. And I know that if I have, two options in my upper right-hand corner, I want to invest in both of them. But that's my answer, and I laid that out in the very initial framework, and then I came back to it. And so it's really, really easy for me to explain my process. And honestly, even better, it's easy for my interviewer to follow my logic and to follow through the case and to be able to say, okay, I'm aligned with that process and I'm agreed with your answer because I've seen the steps you followed and it is a logical process that results in an answer that I am bought in on. If you have enjoyed this content, thank you for watching and thank you for joining us at Essentials Explained. Please like and subscribe and check out the other videos on this playlist and on our channel.